All right. Wall Street saw a rally revolving around President-elect Donald Trump's upcoming administration. But will it keep up? That's the question. Joining us now to talk more about it is Brent Wilsey, the president and CEO of Wilsey Asset Management. Brent, good morning.
Good morning. Good to be here.
Boy, the stock market responded pretty well after
it really did, because he's, obviously pro-business. And what's good news is that, and it did kind of taper off this past week and kind of slow down a little bit. But I think we'll have that. Then what's going to happen is you're going to have the Santa Claus rally, which will kind of pick that up. And then you have what's called the January effect. Now, where I get concerned is late January, February, that could be the time to kind of start looking at some buys, because I think we'll have maybe a 10, maybe a 15% pullback after all the excitement's over. He's in office and now back to work.
Right. So he gets back to work. What happens to markets?
Well, what's he doing? I mean, he's doing some positive things, lowering corporate taxes, which again is going down to 15%, but that's only if you produce here in the United States. And that's a big positive, because a corporation will be spending less money on taxes, which means they can spend more money to build their company, to hire more employees, and the employees will pay taxes because they're earning money. It's a win-win situation, so positive to see that. And also, too, when companies build their corporation, that helps other places as well, because you got people going in the office and so forth. Well, they're spending money around the company. They're stopping places after work, so a big positive there. Also, too, another big one is reduce the regulations. I remember last time he was in office, if you want to add a regulation, we're going to take 2 off. Now, what does that do for businesses? Well, again, they can get things done quicker, less money they have to pay on the regulations to get that, less for the attorneys and so forth. Again, more money can go to the shareholders, more money goes to the employees. It's just a win-win situation all around. And then we should see a lot more what they would call mergers and acquisitions. And what that is where companies start buying other companies because, hey, it makes sense to do this. So that's going to really help out the equity market quite a bit.
Where do things stand? Because there's pros and cons, depending on who you talk to, about the tariffs that he's talking about imposing.
Yeah, and I still want investors to be cautious, because even Goldman Sachs said over the next probably 10 years or so, the S&P may only average 3 to 4%, because there's a lot of things very expensive. Talk about the tariffs. The tariffs are something that are a good and a bad thing. And when we did this before, China didn't commit to their deal. Like, okay, we'll do this, you do that. They didn't do it. This time, China is more in a bad situation. Their economy's not so strong, so they need us to help them out. But I think President Trump, when he gets in, or President-elect Trump, when he gets in, I think he may impose tariffs right away and take them off, as opposed to negotiate first. But China has to negotiate, because we will kill their economy if we put these tariffs on there, and because they're very important. They're imports for them. For us is what happens. So that's going to be a big one there to take that off.
And you have valuations, CAPE 2009?
Yeah, and this is why I want to caution people, because technology has done very well. And there's a thing called CAPE ratio, which actually adjusts the earnings over the last 10 years. Back in 2009, that was 12. It's now 38. That's very expensive. You don't want to be paying these high prices, so that's a very high CAPE ratio. And then the equity market, their stocks, all the stocks, are 200% the value of the gross domestic product. That's another warning. That's a warning sign. It shouldn't be that high. It should be about 125, 150. So that's a warning sign too. So you got to be very careful when you're investing. And I always tell people, remember, past performance is no guarantee of future results here.
Okay, we're running out of time, but I want to get to this. Apple selling Buffett New York pension?
Yeah, because what's actually happening is that with these tariffs, that's going to be a problem. And there may be some companies that get away from them or have something different. But Apple, for instance, I think the tariffs go on there, it's going to cost about $250 more for an iPhone. And actually, Warren Buffett went from 900 million shares down to 400 million shares. New York Pension Plan, they sold all their Apple stock. So a lot of these companies are getting rid of it because they're concerned that, one, it's very pricey, and two, what will these tariffs have to do to them and other businesses as well, like Five Below, a retailer, they get like 80% of their products from China. So if you're investing, make sure you're not getting companies that have a lot of manufacturing in China, because their prices could go up dramatically, which will hurt their earnings and not good for them.
All right, that makes sense. Finally, bonds, how are they affected?
Yeah, bonds are going to be a problem, because I always want to educate people that the Federal Reserve controls short-term bonds. But long-term bonds, a 10-year treasury, which deals with your mortgage and everything else, that is on a supply-demand market. So if the market does have the need, or has a need for more bonds because we need to have more, debt is rising, that's going to push rates up, because you've got to have more people buying them, and less people will be buying them. So therefore, they have to put the rate up higher to have people actually buy those bonds. So it's not a good situation there. That could cause some problems. So it's not smooth sailing for the next 4 years. I'll be able to understand investing. But there's going to be great opportunities, great for business. Be patient and understand what you're investing and make sure you get those good values.
And you'll be here to tell us all about it.
Exactly. I'll keep you posted.
All right, Brent Wilsey. Good to see you, Brent. Thanks for the info.
You as well.